Jack, let's pick up where Santelli just left off, and that is about the rise in interest rates in Europe, a slightly more hawkish tilt from the ECB's chief, Ms. Lagarde. How concerned should U.S. equity investors be about that and or about specific corners of the U.S. stock market?
Yeah, I mean, it certainly was a surprise. A lot of the rate hikes that we expected in 2023 are being pulled forward to 2022. Christine Lagarde is kind of known as somewhat dovish, so having this rhetoric was a little bit of a surprise. We also saw the Bank of England raise rates. So clearly, the central banks worldwide, at least among the developed world, are circling the wagons and tightening financial conditions. And that will have, as we've seen, a deleterious effect on equities.
Is it mostly going to affect what we would call the classic growth stocks, or are there corners where you can safely or astutely, not necessarily, astutely buy growth?
Yeah, I mean, I think that there are places where you can dip in, but here's the issue, Tyler. We believe that inflation and growth will trend back toward pre-pandemic levels by the end of the year. But in the meantime, we've got March 10th with another inflation report, and we're expecting that probably peaking either, if we didn't peak already, could be peaking there. That's going to be a very difficult report, and I think that's going to put some pressure, downward pressure on prices if that does come in pretty hot. That said, I think at some point now during the second half of the year, when economic growth starts to slow with inflation, investors are going to start looking for growth again. We think small cap growth is probably the best place to be because relative to large cap, it's trading at the biggest discount in history.
So small cap would be a place to go. You have a couple of names that I see that you do like. Too Simple, Overstock, and whether it's Cadent or Cadent, I'm not sure. Cadent, which is in industrial machinery. Why those three?
Sure. Well, Too Simple certainly been beaten up this year. It's down about 50%. It is autonomous driving in industrial, in trucking primarily. It's roughly 8% owned by Navistar. We also, Overstock, I think most people know. I think a lot of these companies are decently high quality, but have been unfairly punished. And again, we're looking at this is really more of a second half play. We're just starting to put this portfolio together now. I think it may still be a little early here. Like I said, next week, we could see a punishing inflation report near term. But I think as inflation rolls over and as growth slows down, investors are going to start looking for growth again.
All right, Jack, thank you very much. We appreciate your time as always. Good to see you, sir.